So now that Nvidia has reported those results, let's talk a little bit about the possible impact on the markets today. Joining us for that is Hank Smith. He is the head of investment strategy at Haverford Trust. And Hank, were you at the watch party?
No, but it's interesting. I believe the Wall Street Journal commented this morning that because there were no major sporting events going on, particularly NFL football, this was the best event in town.
So you were listening closely. What did you take away? Obviously, strong numbers across the board, but maybe expectations that were impossibly high if you look across the street.
Yeah, but they exceeded expectations both on the top line and the bottom line. And look, when you're growing as fast as they are, you can always nitpick at something. But overall, very, very strong earnings report. And I think really key to this is their current chip, Hopper, is still seeing very strong demand, even though you're only a quarter or two away from the next generation Blackwell coming. So that's just a sign of just how important this company is to the build out of AI across the entire tech industry.
Why do you think the stock's off? It's not off by a lot, but let's say 2.6%.
Well, look, I think you have to take into account where it's come from. I think year to date, it's up over 150% or somewhere in that neighborhood. Don't forget, earlier this month, it had a 25% drawdown from a high in June of 140. It got down to around 100, 101. It's since recovered a little bit. So you're going to expect volatility in a name like this, and actually. A downdraft, we look at that pretty positively because we'll add to the stock with downdrafts.
Downdrafts of even 2.5%. I mean, I think that's the question. For investors who already own this stock, what would you tell them to do? For investors who don't own this stock and are thinking about jumping in?
Yeah, that's a huge challenge. If you don't own the stock, do you have the patience for that kind of drawdown? And you're right, 2.5% isn't that much. That's just noise. But again, earlier this month you had a 25% drawdown, and you just have to have discipline to wait, be patient, take advantage of that, knowing that the fundamental story remains very, very strong. Sure, there'll be some deacceleration in growth over the next several years. There have to be when you're that large of a company. But the story is intact, and as Mark Benioff said, we're in the very early stages of this AI boom.
Jensen Huang, speaking yesterday, looked like he was really trying to point to the idea that data centers their data center business has more diverse customers than people think. People look at it and think it's just the hyperscalers. He said they're only 35% of their business, I think. But then he went on to say in an interview I was listening to that, that's 55% of customers that aren't hyperscalers. So I don't know where that gets you, 35%, 45%. But his point is that it's not just the hyperscalers. How important is that point to investors?
Well, I think it's a very important point. And look, I'm not sure there's an industry, a sector out there that ultimately won't benefit from AI, including our sector, the money management business. And so, look, we're at the beginning, the infancy. We're not in the 8th or 9th inning. We're in the 2nd or 3rd inning of the secular trend.
I think that's probably true, but there aren't a lot of companies that have the deep pockets that can afford to pay these sort of premiums. So I think the question becomes, while AI might benefit everyone, and you can think of places like hospitals and drug companies and all kinds of places that would benefit from this, which of them are going to be able to pay that sort of premium, and how far do prices have to come down to get it to the rest of them? I think of hospitals being a great place, but hospitals, some of them are operating on 1% margins.
Well, that's true, but there are a lot of businesses that in the financial sector. You look at the top 10, top 20 companies. They look at what J.P. Morgan is spending on technology over the past several years. It's just massive, and the number of employees they have that are engineers and technologists, it is massive. So. Your point with some of the lower margin businesses is a good point, but I still believe they'll find the money to invest in AI.
Hank, when you're looking at the ranges, what would be a price you'd buy in at, a price that would make you think, okay, this is getting a little rich? Because we do see that big trading range.
Yeah, look, I think if you got down into the low 100s in that area, I think that'd be an excellent buying opportunity. And, you mentioned volatility earlier. It wasn't too long ago, in the first 9 months of 2022, that this stock sold off over 70%. Now, I'm not suggesting you're going to have that kind of downdraft anytime in the near future. All I'm saying is you can have volatility in companies that have great growth paths in terms of earnings and revenue. We saw that back in the 1990s during that decade with Cisco Systems, which had annual downdrafts of between 20 and 40%, and yet the company performed extremely well on a fundamental basis.